This is the Royal Financial Investment Group. My name is Prince Dykes, as always. Thank you guys for joining me again today. Today's topic is going to be, I'm going to discuss my worst financial decision. But before I get into that topic, don't forget to like, subscribe, comment, share, all of the good stuff. I definitely want to see some of you guys' feedback. Thumbs up, it was a good video, bad video, whatever. Leave me a comment below. We can have an open discussion like I always like to have. Any questions, you can leave them down there as well. Also, I wanted to throw in, made a big announcement on Friday that I have written and completed our first book, which is called Wesley Learns To Invest. Wesley is my 4-year-old son that you guys have seen on other videos, or that you can see on videos, excuse me. You can see on other videos. He's my 4-year-old son, and it's a book that I've written about. It's the first book I ever seen like this, I heard about it, of a father and a son. They go through, actually a real book about us, but it's a father and son that goes through, they discover the stock market, from finding the stocks, and they purchase stocks and all of the good stuff like that. So it's a nice little gentle introduction to stocks, which would be great for kids and which also would be great for parents as well. But I don't have a lot of time, and I definitely know you guys don't have a lot of time, so let's get straight into the video. My worst financial decision, right? So it kind of comes about interesting because yesterday I was on the phone, yesterday I was on the phone, I was having a discussion with one of my good friends, Henry, and we was talking, and I noticed that in life that you can learn more from other people's mistakes than you can from their positivities. For example, right, wouldn't it be a good idea to hear the mistakes of, let's say, Mark Cuban or your Warren Buffetts or Bill Gates or Steve Jobs or a slew of other people that are out there? You would like to hear the mistakes and, hey, what they messed up at, because where they messed up at, because you can learn a lot from that as well. So I decided, I was like, you know what? And we was going over some of our worst financial decisions. I was like, you know what? People can learn from that, because had somebody told me that, I probably would have made a better decision. I know it's life, we're all human, we all will make decisions, bad decisions, and good ones as well, hopefully. So let's get into my worst financial decision. So like most of you guys already know, my parents, they really didn't teach me a lot about finances. They pretty much mostly taught me to save, and they taught me how to just say, hey, get a job, retire, and save up your money. They never spoke about investing. They was, well, the stock market goes up and down. I don't know anything about that, so stay away from it. That's exactly what they told me. Hey, good. Stay away from credit cards. Stay away from markets, investing, and stuff like that. Just save your money, and you're gonna retire one day. So in their era, that worked pretty fine. But we live in a new era now. In 2015, it's kind of rare to just stay at a job for 30 years. You have to put your money somewhere. You have to, whether it's a 401k or houses, real estate, stocks, whatever. You have to put your money into something. So I took their advice, stayed away from the market, and I got a debt. I paid off my debt or whatever. I had no debt. I was saving money, and I was wondering, I'm like, well, I wonder what everybody else is doing. What's this whole thing about investing? And one of my supervisors said, hey, you should look into investing. Just grab yourself some mutual funds. And I don't know, what is those? What are those? So he was like, okay, go see this financial advisor, and they'll recommend you some stuff. Set up an appointment and grab some mutual funds. So okay, that's a pretty good idea. And this was around about 2000, the end of 2007, beginning of 2008. So I was like, okay, cool. So I took my money and I sat down with a financial advisor, and he was like, good thing for you, you're a young man, a great thing for you would be growth funds. You should get into a growth. Back then I was like, oh, okay, all right, because just put my money there. And he said, well, you can put in next, another $100 a month if you want to put inside your mutual fund. I said, okay. So I put money into the growth fund. And also later on in 2007, I had a little bit more money. And I said, one of my other supervisors said, hey, if you want to put money into investing, look at some more mutual funds. You just don't have to have one. So I said, okay, cool. Put my money in more mutual funds, right? It's like, you're young, you should take risks. Put your stuff into, growth mutual funds. Okay, cool, great. And we all know what happened at the beginning of 2008. The market tanked, right? So there I am. I'm pretty much essentially getting in around at the start at the peak of the market almost. And I'm just throwing money in there. I threw money in there and I kept reinvesting. And I would log in and I would say, wow, the value just keeps dropping and dropping and dropping. You know, just why I keep putting money into something that's just losing money over time. It's like, wow, what's going on? Then what started playing in the back of my head, what my parents had taught me: stay away from the market. Market is bad. You're going to lose your money. You don't know what you're doing. And I was like, wow, did somebody just run me for did somebody just tell me anything to get my money? I'm not really understanding, right? So what did I do? I was like, well, if I had put this money into a savings account, I would have had more money, because my savings account isn't moving. So I could have put it into a savings account on a CD. I'm putting it into this stupid thing over here, and it's just, the value is just dropping over and over and over. Because at the same time, I'm turning on the TV, and what is everybody saying on the TV? Oh, unemployment at all-time high. General Motors filed bankruptcy. Ford filed bankruptcy. AIG filed bankruptcy. This is the height of the financial crash, right? Everything is crashing. Everything is just, gas prices are through the roof. Unemployment is through the roof. All these companies are filing bankruptcy. All the auto industry goes down. The real estate bubble bursts. Everything's just going bad. I'm just seeing this mutual fund just drop. I'm like, why I keep putting money into something and it's dropping? And I'm seeing the news, and I remember what my parents said. 2008, people thought like, hey, the world will never be the same again. This is it. This is the end. And I was like, wow, I remember what my parents said. I'm seeing my money drop, but I'm looking at my savings and CDs and stuff like that, and they're kind of sitting there. They're not really moving. And I was like, wow, this seems like I should put my money over here. What am I doing? It's stupid. My parents was right. So what I do? Pulled out my money. Right? Pulled out my money. So the funny part about the story, and I took a loss. Took a big loss. Just pulled it out right at the bottom of the market. Pulled out my money, and I said, hey, I pulled out my money and I'm just going to put it in my savings account or something. I'm not going to try it again. That's crazy. So as I started to learn about investing and stuff like that, I became more confident and had more knowledge of the market. I started putting money back into the market. But it was funny because the other day I ran across a old statement, right? I ran across this old statement when I moved out here to Hawaii, and I ran across the old statement. I looked at the statement, I'm like, wow. And I look and I see what fund did I have, and I just did a little research on it and said, let me see what this fund is doing now. This fund was probably like 5 times higher than what I had. I could have made a 500% return had I just let my money stay in it, right? Because guess what? The market just took off after that. 2008, 2009. Had I just, what I should have done when I pulled out, instead of pulling out, I should have put more money in. But since I didn't know, I'm watching the media. I'm going by what my parents has taught me. And what do when everything is crashing? I pull out. The worst decision I could have made. I pulled out, and probably back then I probably lost about half to 60% of the money that I put in, when all I had to do was let it sit. And to make it worse, when I pulled the money out, I didn't even pull it out for a reason. It's not like I needed to go buy something or I needed to go do something. I just pulled it out because I thought I made a mistake, right? So when the market crashed, I should have brought more. And I ran across that statement, and it was funny because I looked at that statement, and I still called the company that was holding it. It was like, hey, did I close this account all the way out? It was like, yes, you did. I'm like, wow, man, why did y'all let me do that? That was stupid, right? But hopefully you learn something from that, as far as when you see something crash, when you're hearing bad news, when you see something go down, it's kind of hard to go in and buy something to go down, right? It's like seeing a falling knife. You see a knife falling, you don't want to stick out there and grab it. Another story, my friend Henry was telling me. He told me, he was like, I kind of had the same situation. He worked for Delta, and he was like, when I was working for Delta, when I was working for Delta, I heard about, I think it was buying another airline or something like that. So he's like, man, maybe I could get into the company stock. So he bought the company stock in Delta for about $10 for where he worked at. I bought it for $10 or whatever. And he seen it drop from $10 and it dropped all the way down to $7. And he was like, well, I don't think I made a good decision. So he pulled the money out of Delta. Once he pulled that money out of Delta, he didn't think about it. He said, a couple years later, I turned around, Delta's at $20 a share. And while we was talking, I looked up online. I'm like, actually Delta is now at over $40-something a share. And, he's kicking himself like, wow, why didn't I just leave it there, whatever. I said, what did you do with the money when you took it out? I don't know. Same thing as me. I don't know, but he has a similar background as me, where your parents never taught us about investing. Our parents just said, hey, save and work or whatever. It was like, so I just saved and I worked. I really talked about investing, and it didn't happen. I thought I made a bad decision. I just pulled the money out and I went on my business, and look what I could have had today. And it's just the philosophy, the mindset of not knowing. Also, the crazy part about it was that he was working for Delta. He was working at the airline, so he was helping the company make money. It's for, like, a lot of us work at Coca-Cola, General Mills, General Electric. We work for these companies, and we don't even think about investing into the company. We go in there putting all these ideas together, helping this company become more profitable, but we never connect with growing with the company as well. So he worked for Delta to help, believed in the company, showed up every day, did his job, did a great job at his job, but did not connect with the growth of Delta. And those are two situations, because we all know the market will have another downslide, just like it had in Great Depression, just like it had in a recession. It will have another decline. But what will you do in that decline? When you see that decline come, I want you to think of these situations and say, hey, I remember somebody said something about when he saw this decline. When you see that decline come, it's not just going to be just an easy positive decline. It's going to be negative. It's going to be filing for bankruptcy. We don't know if it's going to make it. It's going to be the New World Order. All these other things are going to be coming. It's going to be horrible news. But if you look after the Great Depression, you look after the Great Recession, you look after the dot-com bomb in 2000, what happened? May have took a little while, but they came back better than ever. They came back strong. And you can profit even more if you do something called dollar cost averaging. That's another video. That's for another video. But as always, don't forget about Wesley Learns To Invest. Will be out in July of 2015. And as always, thank you guys for watching. Until the next video, be safe.